How did I become a successful trader? Hi, it's Charlie giving you the midweek video. Well, I think the main thing that all traders need to do is you need to be able to see and have that self-awareness to see where your strengths and weaknesses are in trading. So that was the real aha light bulb moment for me. It wasn't necessarily something in from a technical perspective that I was doing wrong. Necessarily, it was actually a mindset issue. So let me go through that example because everyone's different when it comes to the markets, and so often we strive to find something technically that's going on when in fact it's not often necessarily a technical issue. So for me, it took a long time to realize this, but this was my essentially my equity curve doing something like this. Okay, so the equity curve would rise, and then at this point over here, after having some nice, whatever, winning trades, managing trades well, and overall being profitable, I would then get overconfident. And at that point, with the benefit of overconfidence, I would then take trades that I wouldn't have otherwise taken down here. So that overconfidence would be like, well, it doesn't matter if I take this trade, if I have a loss on it, I've still got loads of, I've still got loads of prior profit that I've made, so it doesn't matter. And so you end up justifying, or I would end up justifying that sort of thing to myself, saying, oh, it doesn't matter because it's only a small loss relative to the gains that I've made. But of course, then they start to compound, and you do a couple of those, which might then lose, and gradually the equity is starting to roll down, and then I would start to overtrade, trying to make back those earlier losses, and then if the overtrading didn't work, then the equity would just then come down, and then I'd get to a point where I'd say, this lack of discipline isn't working. Right, let's go back to being a bit more disciplined down here, be a bit more selective, don't overtrade, and then funnily enough, the equity curve would go back up. And this was going on for, quite a significant period of time. I'm talking about, a year or more. I can't remember. It's such a long time ago now. But certainly it was over this period here was easily over a year or so. So I'd got to a point where I could make money in the markets, but I hadn't got to the point where I could hold on to that money, and I'd always end up giving it back, over, let's say this was about, a 3-month window from, top to bottom and top again. And so then there's the whole, and of course we're like 3 or 4 months on again, 3 to 4 months over here. So by the time I get back to being overconfident again, I've sort of forgotten, that I was like that before. And before you know it, you're doing the things that you did 3 or 4 months previously, and then you repeat the whole, and this is what I was doing, repeating the whole cycle again. So then I'd go to lack of discipline after a good run in equity again, and then give the equity back. Go back to being disciplined. Right, better be disciplined now. My equity's come back down. Right, and then fun enough, and then the equity would start going back up again. So my Achilles heel was, fun enough, myself getting in my own way. And so it wasn't technical at the end of the day. It was the key decisions that I was making based on being a greed-based trader and getting overconfident after a winning run and then losing that discipline. So the light bulb moment didn't come on until this had happened several times. And then I just thought, right, okay, well, if I can carry on trading the way I've been trading through here and not get overconfident and do all those things that I was doing up here and over trading and all of that, then maybe my equity can keep on growing. And that was my personal light bulb moment, which turned me into what I would call a successful trader. That is someone who the equity broke out and I managed to keep on to it. of course, you always have drawdowns. We're not talking about, just drawdown periods. We're talking about sustained over a period of time where, your equity curve is still going to be doing this over the longer period, but you keep going to new equity highs as opposed to just going sideways like this. So that was my revelation, so to speak. To someone else, it might be the opposite. It might be fear. When they have a drawdown, they get really fearful down here, maybe. Or sometimes you get people getting fearful, funnily enough, after they've made money. And they get fearful at the top of the equity curve and they tighten up because they don't want to give it back. And the very thing that they don't want to do becomes their reality. Because they tighten up so much, they move their stops too aggressively, they have stops too tight all of the time, and then they start getting stopped out on trades, which gradually just creeps the equity curve back down there. So remember, fear can happen on both sides of the ledger. It's not always after some losses. Sometimes fear for some people comes after wins. So there's all sorts going on. I would suggest that anyone who's watching this video who's thinking, oh, this is interesting, it's not always a technical reason as to why your account's going sideways. Usually it's something mindset related. So there you go. I thought I'd share you my one today, but it all comes from understanding yourself, understanding your personality, and some of the things that you may be doing that you may not have otherwise realized you were doing. So logging trades is a really important thing to do, because then some of the things you do will show up in your trade log when you do trading reviews. So there you go. There's just a few thoughts for you this week on how to transcend in your trading to becoming more successful with it, because there's always some subtleties that need adjusting. Have a lovely week. I'll see you at the weekend.